A credit card interest rate is the percentage your credit card issuer charges you for borrowing money if you carry a balance on your card. This rate is typically expressed as an annual percentage rate, APR. But the actual interest is calculated daily or monthly, depending on how often you carry a balance. How does the credit card interest rate work? When you use your credit card and don't pay the full balance by the due date, your card issuer applies interest to the remaining balance. The interest is calculated based on your card's APR and how much you owe. For example, if your card has an APR of 18% and you carry a $1,000 balance, you'll be charged around $15 in interest for the month, depending on how interest is compounded. If you pay your balance in full each month, you can avoid paying any interest at all. Types of credit card interest rates. Purchase APR. This is the rate charged on purchases if you don't pay your balance in full. Cash advance APR. A higher rate applied when you withdraw cash using your credit card. Penalty APR. A much higher rate that applies if you miss a payment or violate your card's terms. Introductory APR. Some cards offer a temporary lower or 0% APR for a limited time, typically for new purchases or balance transfers. Why is the credit card interest rate important? Understanding your credit card's interest rate helps you avoid unnecessary costs and manage your finances better. High APRs can quickly add up if you only make minimum payments. Carrying a balance over time leads to compounding interest, increasing the amount you owe. Example of credit card interest rate in action. Imagine your card has an 18% APR and you carry a $1,000 balance. Each day, interest accrues on your balance. With daily compounding, you'll owe approximately $15 in interest for 1 month. If you continue to carry a balance, that interest is added to your total, and you'll be charged interest on that new higher amount. This shows why paying more than the minimum amount due, or paying in full, is essential to reduce or avoid interest costs. How to manage credit card interest. Pay in full. Avoid interest entirely by paying your balance in full each month. Understand the grace period. Many cards give you a grace period where no interest is charged if you pay your balance on time. Make more than the minimum payment. Paying only the minimum can keep you in debt for years, as most of your payment goes toward interest, not the principal. Choose a low APR card. Look for credit cards with competitive APRs if you expect to carry a balance. Utilize 0% APR promotions. Take advantage of cards offering 0% introductory APRs, but ensure you pay off the balance before the promotional period ends. By understanding your credit card interest rate and how it works, you can make smarter decisions, save money, and avoid falling into costly debt traps. Always aim to pay your balance in full to make the most of your credit card benefits without the added costs of interest.